attention to. So basically we've gone over what is it that you're protecting and from who you're trying to protect it from. So these are two main points that you should really keep in mind when you're planning for asset protection. Another question that's usually brought up and usually most people seek to do, but now that you know it's almost impossible, is to eliminate risk 100%. Risk can be mitigated, risk can be reduced, it can never be completely 100% eliminated. The way that risk can be managed and mitigated is through insurance policies and through proper separation of your business and your personal funds as well. You basically want to separate your activities in a certain manner as well. We'll be going over that in a later slides. So basically, what I put together for you right here is a diagram to basically show the general flow of liability. Now, for a typical family of husband and wife and maybe a kid or two, an average person will have some liquid assets such as cash, maybe some stocks, maybe a modest home. Doesn't have to be big. This person, in our example, has 2 apartment buildings, 1 duplex that they have for their vacation home, or they rent it out sometimes, and they also have another business where they basically generate income. Now, this should be business right here. So you have to understand, as you can see from these green arrows, that liability can come from many directions. Okay, liability can arise from the family, and then from there on, it can go into the assets. What does that mean? As an example, let's pretend Bob, I don't want to offend the Bobs out there, but let's pretend Bob was driving and he accidentally rear-ended someone when it was on a rainy day. The insurance policy he had did not cover enough for the injuries and for the damages during that accident, and the liability will be originating from, as you can see here, the sensor, and potentially the other assets will be in jeopardy, such as liquid assets, the personal assets, and even the apartment buildings and the businesses. Okay, so another direction that liability can arise from is from, of course, the rental properties or from the businesses. If perhaps someone was to slip and fall on one of the rental properties, then at that point the person who's injured has the right to sue the owner, and at that point, there's no, you can tell from here, there's no separation if it's been determined that the injuries were more than what the liability insurance is able to cover, and that's not enough to compensate them, then the other assets will be in jeopardy. So let's just give you a better example. There's a business, the family before had a business that operates machinery. One day, one of the employees gets into one of the trucks and by accident gets into an automobile fender bender, and it's been proven that the employee is at fault. The owner of the injured party can try to sue the owner for negligence for allowing for this scenario to be available for this injury to happen. If the, like I said before, if the insurance policy isn't quite enough to cover it, the owner's other assets will be in jeopardy. So here's some of the basic examples of basically how the risk can be managed and how liability can be prevented from reaching to the other parts of your assets. If Bob was to set up a business entity, now in this example it says LLC number 1 and LLC number 2, just realize that it just really signifies any business entity. It could be a C corporation or an S corporation, or a multi-member LLC or a single-member LLC. In this example, we have the apartment buildings here and the other, well, these are businesses here. These are supposed to be businesses separated, and you see here the personal assets are not put into a entity, reason being because there's no business purpose for them being in an entity. But if that same scenario was to happen with the business, and same scenario, the automobile driver got into a fender bender, and it was proven that it was the owner's fault, and the insurance policy couldn't cover it, then at that point, the liability, as you can see from the black arrow, would be limited to what's inside this entity. Okay? That's one of the beauties of setting up a legal entity for your operations. Something will arise here on the rental property side, it would bounce back. Now, you'll also notice that there's the green arrows that originate from the center. This is personal liability. Now, since you own the liabilities, now this is a possibility. Depending on what you do on the personal level and how bad it is, and how bad the lawsuit is, this protection might be adequate and might be not. It depends on basically the magnitude of the lawsuit on the personal level. Now I'm just basically making an extreme case. I'm pretty sure most of us usually stay out of trouble